Join me as I dive into the world of cryptocurrency and try to explain the difference between CEX and DEX in just 60 seconds. In this video, you'll learn what centralized exchanges, or CEX, and decentralized exchanges, or DEX, are, and why they matter in the crypto trading world. Many traders struggle to choose between CEX and DEX, often feeling overwhelmed by the options and the implications of their choice. The main issue is that both types of exchanges have their own strengths and weaknesses, making it difficult to decide which one is right for you. One of the key factors to consider is the level of control you want to have over your assets. With CEX, you're essentially handing over control to a third-party intermediary, which can be a concern for some users. On the other hand, DEX offers a more decentralized approach, giving you full control over your assets but also requiring more technical expertise. Then there's the issue of security, a major concern for any trader. Both CEX and DEX have their own security measures in place, but they're not equally effective. In addition to security, you also need to think about the fees associated with each type of exchange. CEX typically charge higher fees, but they also offer more advanced features and a more user-friendly interface. DEX, on the other hand, often have lower fees but can be more difficult to navigate. Ultimately, the choice between CEX and DEX depends on your individual needs and goals as a trader. We'll break down the features, advantages, and disadvantages of both CEX and DEX, including aspects like security, fees, and user experience. One of the main advantages of CEX is their high liquidity, which makes it easier to buy and sell assets quickly. They also typically offer a wider range of assets to trade, as well as more advanced features like margin trading and stop-loss orders. However, CEX also have their drawbacks. They're often vulnerable to hacking and other security breaches, and they can be slow to adopt new assets. DEX, on the other hand, offer a more decentralized approach, giving you full control over your assets and allowing for more anonymity. They also often have lower fees and are less vulnerable to hacking. However, they can be more difficult to use, especially for beginners. In terms of user experience, CEX are generally more user-friendly with intuitive interfaces and a wider range of features. DEX, on the other hand, can be more difficult to navigate, especially for those who are new to cryptocurrency trading. Another key consideration is the level of regulation. CEX are often subject to stricter regulations, which can be a plus for some traders. DEX, on the other hand, are often less regulated, which can be a concern. Finally, there's the issue of scalability. DEX are often better equipped to handle high volumes of traffic, while CEX can be more prone to congestion. The key insight here is understanding how each type of exchange aligns with your trading goals and risk tolerance, which can make or break your trading success. If you're a beginner, you may prefer the more user-friendly interface of a CEX, even if it means sacrificing some control over your assets. On the other hand, if you're more advanced and want more control over your assets, a DEX may be the way to go. It's also important to consider your risk tolerance. If you're willing to take on more risk in pursuit of higher returns, a DEX may be a better fit. Ultimately, the choice between CEX and DEX depends on your individual needs and goals as a trader. The key is to understand your own priorities and make an informed decision based on your individual needs. By doing so, you'll be able to make the most of your cryptocurrency trading experience, regardless of whether you choose a CEX or DEX. To wrap up, remember that both CEX and DEX have unique benefits and drawbacks that you should consider before diving into cryptocurrency trading. If you found this video helpful, don't forget to like, subscribe, and check out our next video on trading strategies for beginners.